Do you know that the reputational risk is the biggest risk that any bank, any financial firm, any insurance firm, or any other company faces? It is a risk which is very easy to define, difficult to manage, and is almost impossible to measure. If you have a name, you also have a reputational risk to manage, because name is synonymous to reputation. Before we get into the details of this course, I want to make a case. I want to make a case by starting off with the hypothesis that states reputation is everything. And we will go back to the global financial crisis of 2007 and 8, and we would look at the case where one of the banks actually fell because it could not manage its reputation properly. We all know about the recession that America was facing back in 2007, which also started impacting the rest of the major economies in the world by 2008. And during the same time, Northern Rock Bank, which was a bank based out of England, was facing a very different kind of crisis. It wasn't because of the financial crisis to begin with. It was something else. The Northern Rock Bank was seeing a bank run, and that was a bank run that England itself was seeing after 140 years. Let's just explain what a bank run is. Now, to understand what a bank run is, I'll take an example. Let's say you wake up one day in the morning and you read a very negative news about your own bank. And the news states that solvency of the bank is in question, which in turn means that there are good chances that the bank will not be able to fulfill its obligations and all your money deposited in the bank might be in question. You yourself would start wondering, what if tomorrow bank is not able to repay the money that you have deposited with it? What would you do? You would not wait for tomorrow. You would rush towards the branch and you would try to withdraw all the money that you've deposited in that bank. Or nowadays, you don't even have to rush to the branch. You would open up internet banking and you will withdraw all your money from that bank account and deposit it in the other bank, which is still, you think, a trustworthy bank. Yes, of course, given the condition that you have two bank accounts. But the point is, you're not the only one who read the news. There are thousands and possibly millions of customers out there of the same bank. They also read the same news and they're also wondering whether they should trust their bank or not. This is exactly what happened in case of Northern Rock. And this phenomena where people rush towards the bank to withdraw all their money is called bank run. Bank run is synonymous to loss of reputation because it only happens when the bank is not considered a trustworthy entity anymore. Talking about Northern Rock, it was the fifth largest mortgage lender, which means it had a very big exposure to real estate market, not just in America, not just in England, but also in America and a few other European countries. Due to the reputational risk and due to the crisis, Bank of England eventually had to bail out the Northern Rock by buying the controlling stock in Northern Rock. So now you must be wondering, what is it that happened that led to the bank run on Northern Rock? So let's just look at what exactly was happening. As I mentioned, Northern Rock had very large exposures towards the mortgage market. And we all know that subprime mortgage lending was one of the reasons why US was seeing its recession at the first place. In US, because of subprime mortgage lending and of course because of the phenomena called securitization, a lot of banks had started feeling a lot of banks had started taking a lot of losses. A lot of banks had started taking big losses. It was also the time when the risk was no longer supposed to be limited to the American markets. So all the other banks that were not based out of America but still exposed to American real estate market in one way or the other started feeling that they are also staring at big losses. And Northern Rock also had substantial exposure towards the American mortgage market. During the recession, as we all know, banks were facing credit crunch. The liquidity from the market had dried up. Liquidity is nothing but a word used for cash and cash equivalent instruments. So in other words, cash was drying up from markets. And because of that, Northern Rock had started facing problems. Because of that, Northern Rock was having issues with its working capital. So, what did Northern Rock do? It went to the Bank of England and started asking for emergency funding. Now, emergency funding, when sought by a bank, may not necessarily mean that the bank itself is in a bad position. It can be because of any reasons. It can be because of the temporary shortage of capital, which a bank can fulfill by borrowing money from the central bank, in this case Bank of England, and repay it whenever they have enough cash generated from its operations. But this time, as the luck had it, because Northern Rock got unlucky, yeah, not lucky, unlucky, this news got leaked in public, and believing that, people started believing that Northern Rock is going to fall soon. What happened next? Within one day, 5% of the total bank deposit was withdrawn. On 14th of September, so many people started running towards the bank and withdrawing money that £1 billion was withdrawn within a single day. That was about 5% of the total bank deposits. In terms of withdrawal of the deposits in a bank, 5% is a very big amount because, as we all know, banks do not keep all the money deposited in their branches. They lend the same money to their customers. And if all the customers who have deposited the money in the bank start withdrawing the money at the same time, then the bank will definitely fall. And this is exactly why reputational risk is the biggest risk that a bank faces. Because if people stop losing trust, they will start withdrawing money, and no bank can survive massive bank runs. Neither did Northern Rock. But the story didn't just end here. September 14th, 2008, September 14th, 2007 was a Friday. When the markets opened again on Monday, the following working day, 17th September, $2 billion of £2 billion were already withdrawn from Northern Rock. That was 10% of the total deposits. And that's a huge percentage when it comes to the withdrawal of deposits from a bank. No bank can survive. As a result, the markets were not kind with the Northern Rock either. The London Stock Exchange was beating down the prices of the stock on a daily basis. As you can see on the image on right side, you can see a very sharp fall from 600 to 200 in a matter of just a few days. That was synonymous to saying the reputational risk for bank had already materialized. But having said that, is it really fair to say that Northern Rock Bank was in a bad shape and it deserved to die? Well, actually no. The health of the bank was not that bad at all. And Northern Rock Bank could have survived very easily. But instead, Northern Rock Bank ended up becoming a victim of reputational risk because it could neither handle the crisis effectively nor it could protect the news from leaking out and becoming a self-fulfilling prophecy. That is, initially people believed that the bank will fall, but bank wasn't supposed to fall at all. It started falling when people started withdrawing its deposits. Hence, the self-fulfilling prophecy. You start off by believing that something is true, and because you believe it's true, it ended up being true. But here, the key part is, had the news not leaked, had the question on the reputation not raised at the first place, there are very good chances that Northern Rock might have survived. But why is it that I say that Northern Rock could not handle the crisis effectively? But why is it I say that the Northern Rock could not handle the crisis effectively? Let's look at one of the incidents. Northern Rock had internet-only bank accounts for some of its customers, which mean that all the services of a bank could only be availed through internet banking. In other words, if an internet-only bank account owner would go in a branch and ask for a service, chances are they would be denied because internet-only bank accounts were cheaper to own and could only be served via internet. But the question here is, but some of the customers with internet-only bank account could not withdraw their money because everyone was going online on the website of Northern Rock and trying to withdraw money. Because of that, the website of the Northern Rock had crashed. So people with internet-only account could not withdraw their money. In one such case, the branch had to call the police because they started holding the bank employees as hostages. Yeah, hostages, or maybe they started threatening the bank employees. But the truth is, bank employees, by refusing the customers to withdraw their account, to withdraw money from their account, just because it was an internet-only account, as was perceived as the reason at the first place was perceived as a supporting fact that the bank is not in a good shape at all, and that's why they're refusing to pay the money. And hence, while neither the customers were wrong in asking their money back, nor the branch people, nor the branch employees were wrong in refusing to pay the money to internet-only account owners, yet this was seen as a fact that supports the news that the bank will not survive. What happened eventually? In 2008, the bank was in the control of Bank of England and was eventually sold to Virgin Money at a much lesser price than its total worth. Northern Rock is now a history. But not every bank handles it in the same way. We would look at another case study where we would go all the way from UK to India, and we see a very similar situation faced by an Indian bank, ICICI Bank, and how they handled the situation differently. It was the same timing, that is the global financial crisis, and the same situation, that is run on the ICICI Bank. People were rushing towards the bank in ICICI to withdraw the money. But the way ICICI Bank handled it made sure that ICICI Bank would survive and thrive. ICICI Bank is still the second biggest bank in India and the biggest private bank in India. So in next chapter, we would look at the similarities between how Northern Rock and ICICI Bank were having same sort of crisis to face with. In the next chapter, we would see how Northern Rock and ICICI Bank were facing same crisis, but ICICI Bank was able to handle it differently. So I'll see you in the next video. Thank you. So I'll see you in the next chapter. So we'll cover how ICICI Bank handled it differently, followed by the course contents and what all topics I would be covering in reputational risk course. Thanks. Thanks, and I'll see you soon.